Welcome back to this channel. This is Aakash, and you're watching This Is Not Podcast Stock Market Series. Now, in this series, I talk about my current investing ideas, what I'm thinking about the markets, and how I think we're developing in terms of different segments, sectors, economic developments, whatever data points are happening in the world, and how it correlates to investing ideas. Now, the reason I don't do a lot of these videos is because, I feel like when you deploy capital, you should give it time. Unlike other people, I don't know how they do it. Like, they have new ideas every day. But for me, I stick to 4 or 5 ideas where I feel like you should at least give 6 or 7 months to understand if it's working. And now I have enough evidence to say that this is where we are heading. Now, if you're new to the channel, I'll give you a quick update of what this is about. I talk about investing, I talk about business, I talk about marketing, and a few different things. I also invite a lot of different guests from different parts of the world, and they share their stories about how they've built their business so that you guys can learn from them as well. Now, this is like my thing. I share what I'm doing in the stock markets. Like I said, unlike other people, I don't talk about stocks because I feel like that's still a gray area. I don't want to go there. I want to help people who are genuinely interested in investing, who are learning about how things work, who can understand basics, but they don't understand how different factors work in the market. So this series, which is the investing side of Business Nerd podcast, is specifically tailored for them. Now, if you're on those, please stick around, leave a follow, and write down what you think about the current state of the stock markets. Now, I'll give you a quick update of what has happened in the 5 sectors. So the first sector that I was very bullish on, that I'm still bullish on, by the way, I haven't changed my view. I'm still bullish on power financiers. This has been the least performing idea about among all of the things that I've shared. The good thing is, the businesses are stable. Although the stocks, the ideas has not worked, but the business looks relatively stable. Now, there are a few positives why I think these businesses are stable is because the asset quality is still top notch. I do not see any sort of trouble in the balance sheet of these power financiers. There was a legacy issue of 8,400 crores, something around that, and that has been stuck in NCLT. I believe any write back from that would be a positive for their bottom line. And I think it should happen in 2026. And I think a lot of good things are happening in the power side. Finally, we're picking up new capacities are being installed. Renewables are seeing phenomenal growth. Now, it does come with a few challenges. We still need to resolve around that, which is RBI's new power financing norm. There's overcapacity in solar, but I think it is bottoming out. New investments have stopped, but recently I've heard commentaries from seniors saying that power is coming back because of the AI and data center and a lot of different themes that are coming along. So this is the least performing idea, but I'm still very bullish. Now, IT. If you had asked me 1 month ago what happened to IT, I would have said that it worked really well. I've been quite bullish on IT since the last 2 or 3 years. Just after AI came out, I was hoping that things would evolve and IT companies will make sure that their businesses are new, they evolve. Unfortunately, the companies did take a lot of time to rethink their strategy, and now finally in 2026, there were a lot of commentaries from senior executives of all the top IT guys. They said that they see a new opportunity in the AI services, which is close to $200-300 billion by 2030. It's a large number if you think about a perpetual growth rate. I'm still not sure why a lot of people are bearish. Recent earnings are also good in IT. If you've looked at what happened in the top IT guys commentary, that decent growth rates, not a lot. These IT guys did strike new large deals with these MNCs who want to transform their businesses and they want to integrate AI services into their platforms. So that was a big focus in these recent quarters, and the earnings are clearly in the con calls. You can clearly see these management talking about how they're going to integrate new strategies. They're going to come up with new offers, and the capex boom in the IT infrastructure, that is one of the biggest. I think it should be one of the biggest industries and the biggest play for AI services companies. And I think most of these IT companies are going to transition into that area, and that might just become a new, AI as a service for those companies. And I think that should happen because there's a tax holiday, first of all. Data center does offer tax holiday in India. If you look at general market perception, historically, when things are going in a bad phase, if you just look at pure Indian domestic play, in these times when rupee depreciates, defensive play does come into play. IT, pharma, a lot of these companies do come into play. I think in that scenario, IT will benefit. Now, GCC expansion is one of the big plays that I think IT guys would partner with, and I think they've already partnered with a lot of GCC expansion companies who are expanding their GCCs in India. Those partnerships, along with AI companies, LLMs, we saw recent one with Anthropic, we might have a great revenue potential with these kind of partnerships. A few negatives on IT, it is that deal size in the AI services is still very small compared to the overall revenue breakup. Like it's still somewhere around lower single digit, which is 5-6% is what we're at. So I think that's still not impressive. Global macros that can have a negative effect. Just today we are seeing that tariffs are being removed, and then tomorrow there's going to be a new tariff. So that still remains a big overhang. These are the few negatives I see in this market. Now, third one. Now, this is one of the biggest ones that I'm very proud of, PSU Banks. Now, of all the things that you can think of, you talk about AI services, you talk about things that have not worked well. But when we talk about domestic market, I think PSU Banks have become a proxy for domestic markets. I feel like for the longest time, we relied on the private banks' data. We relied on them that if they are growing, that means the economy is doing well. Now the situation has been flipped. I feel like PSU banks are in a place where they provide a better data, they provide a better picture to where the economy is heading, where the market is at. I feel like investors trust both of these sectors equally, and it's a big win for PSU banks, by the way. That has historically been the opposite. We trusted private banks and now it's PSU banks. And the positives that I see in PSU banks is the growth is better than private banks. First of all, like the net profits are at all-time highs. Gold standard for the asset quality, like they are very well capitalized. If they want, they can tap into the market and acquire capital at a much lower rate than these private guys. And they have the largest distribution. If you compare, apart from the top 3 private banks, PSU banks are very well capitalized and they have a large distribution channel. New government policy supports them, so which has translated into high ROAs for them. The only negative is like privatization delays. Like even if we discount that privatization would happen, I still feel like they are still phenomenally well run companies and they are still undervalued. I've been very bullish, by the way. Like when PSU banks came along, I think somewhere around 2024, I thought that something is changing in PSU banks. And then I looked into what was happening, and it was very clear that PSU banks are going to perform better than the private banks. I've shared a lot of content on social media. If you're following me there, that has proven right, and I'm very happy with what PSU banks have delivered. Now, OMCs. I don't even know where to start, because if you look at the last 3 months of crude performance, it has been relatively tepid. Crude has not done well, so margins are going to increase for these OMCs. The results are at lifetime highs. So there's a strong marketing cushion from here as well. And I think the GRNs of these companies, we have already seen re-rating being done, by the way. Like if you have not been checking what's going on in the markets, OMCs have been re-rated since the last 1 or 2 months, and I've been very vocal on OMCs for the past 1 year. And it feels so good that finally these guys are seeing value in these OMCs, because it's trading at single P, by the way. Like there is no other way that I can show that there is value in it, because the data is right here. They offer good dividend yield, they offer great business. I mean, everything is aligning for them. So I don't know why people are still bearish on OMCs. And finally, these brokerage houses understood what's the value behind them, and they've re-rated these stocks. There's no more excise duty overhang, which was there around the budget time because the stocks corrected from there, but that's been done. They've already doubled their operating profit margins, and I think that trend is still continuing. And so the only negatives that I see in OMCs today is like sensitivity to policy. If something changes in the government, like they think of subsidizing something else in LPG and whatnot, then there's crude pricing rising because of the US-Iran tension. Like I can't predict those things. I don't know how those work. If we think about investing, like these sectors are still offering good value, and I'm very happy with the performance of OMCs. I think this is one of those sectors where you need to pause and understand what I'm trying to say, and obviously you should correlate with what I've been saying historically. Nobody was talking about metals in the last 2-3 years. I talked about metals in somewhere around 2023, August or something like that, where nobody felt like there's value in metals because They thought that historically not made any money, and like because of Chinese supply or anything, something around China negatives, which was the consumption side, metal market won't appreciate because China is the biggest consumer of metals. I was looking from a different direction. Dollar index was crashing. Now, if you just look at the history of dollar index, you'd understand that if the dollar index is crashing, metal prices usually go up. The dollar index made a low of 96, 97, I think, recently, and like back then it was 103, 107 or something around that. It has come down 7, 8, 10 points, but the metal prices are still, they've gone up, by the way. They're still not as high as I thought it was back then. The reason that metal prices have gone up recently is because of supply constraints. China has been shutting down a lot of factories. They have reduced their infra spending, so they are not consuming as much, and the real estate sector over there is not doing well. On the flip side, Indian markets are blowing off. Like if you think about infra spending in India, we have just announced 12.2 lakh crores in the budget, so which is 22% higher than last year. There's supply deficits internationally, so that is supporting the prices. The government has announced 12% safeguard duty against Chinese imports, so China was dumping their metals, so that has been avoided. And the biggest thing, we saw metal sectors being one of the biggest suppliers to the next up and coming sectors, which we call sunrise sectors, which is renewables. So renewable energy came into demand because of AI and data centers being built up on in India, because of the global capital inflow that the AI services and the AI sector as a whole is experiencing. Government policy became very clear on the rare earths. They were very focused on not relying on China in difficult times. We saw last year what happened with the auto market. Rare earths became one of the biggest constraints when they come to production. I think Bajaj Auto, Hero Motorcar, all these auto guys were worried that they'll have to stop production because of the rare earth supply. But then something changed. They moved to light rare earths. So I think the supply has now resumed, but the government policy changed on rare earths. They're going to invest a lot into rare earths, and they're going to have these metals and mining companies invest more into the rare earths because of the supply and demand, which is the only fundamental that I see in metals, because everything else is just common sense investing. I don't see anything else in metals apart from supply demand. Looking at pure supply demand, it is one of the most underpriced sectors in the Indian markets, and people did not understand that in 2023. I can share videos and posts of me talking about metals. Just look at what happened, how people were afraid of investing in metals because of whatever reasons that they had. Now when I see people talking that this is the commodity super cycle, the biggest commodity bull run of metals in a decade, I kind of asked, like, what were you doing 2 years ago when everything was cheap? Now the prices have gone up, you think it's a commodity super cycle. I mean, I don't understand the logic, but you can go and look at their posts. You can go and look at what their views were, brokerage houses, whatever. You'll find a lot of evidence being thrown around here and there. Absolutely no logic. They wrote a report for the sake of it. I mean, I don't understand. The only negative prices that I see in the metal still is like coal prices are running high, which is a big input cost for them, and the China output is still low. If we are going to actually enter in a commodities super bull cycle, like, we need China on our side. We need China to develop just as fast as it was doing it, and I think it might just happen, just not in the same industries that we have seen. This might be one of those small windows historically that we're going to look back on and say that, do you remember the time when metals were so cheap, and because when the data center came along, the demand exploded, and now they are at $2,000 a ton higher than what they were. Now, those are the 5 sectors that I was bullish on, and like, I'm still bullish on, and I think they should do well. Power financiers, IT, PSU Banks, OMCs, metals. Now, for the next 2 idea, I think this is, I did give a trailer on this. I did share what I think of CDMO, what I think. I haven't talked about auto, and I'll do it. The reason I believe CDMO will succeed is because of one simple reason, which is, now if you look at CDMO as a whole, there are different parts in CDMO, like new modalities, small molecules, like gene therapy. So many different things happen in CDMO as a big basket, but there are different ways to play this. I'm going to talk about different ideas in CDMO as well. So the biggest positive that I see in the CDMO is like the Biosecure Act. US Biosecure Act is one of the biggest tailwinds because new drugs are coming, like the drugs that were already patented are expiring this year in March. We're going to see a lot of influx of generics of those drugs being deployed in the US market. So what that's going to happen, it's going to increase competition, but it's also going to increase the supply side, which is from the Indian domestic manufacturers of like these drugs. So when we think of what's going on in this, just the pharma side, GLP-1 is one of the biggest plays of this decade, this century. You can think of many different angles, but if you just focus on generics, small molecules, cancer drugs, just focus on like obesity drugs, you will find different pockets of CDMO. One out of all these 5-10 sectors of healthcare, like it's going to give you multifold returns. Like the GLP-1 gold rush, just one company in India which manufactures, I think, like the pens of peptide, whatever that name is, Monjaro, that has gone up 10x already. So I think we're going to see a lot of these plays coming along. The only negative that I see, which is also a great point, by the way, like when US FDA gives you warnings, it's going to take a lot of time for these companies that have been slapped with warning letters to come back from it, because it takes an immense amount of capital to build your capacity and then have it compliance ready. You have a lot of these different variables that you can't think of as a normal investor. Like once you're slapped with those errors, it's a lot of your energy, and then you don't know by the time if you get your compliances, the gold rush that we're seeing, it might be over. I think that's a bit tricky area because I still don't understand how they think, how they function. It's purely on their discretion. I don't understand that area. To give you one of the simplest frameworks is just look at the historical pattern. I mean, there's no other way that you would know as an investor. You can't go and check the inspections because it's highly classified. And in the late 2025, PA did bring the AI tools into the inspections. Indian guys were caught because of backdating documents. They're sharing login data. If you think about it positively, 60% of the competition is gone. So this is how you think of CDMO. There's a lot of opportunity in this sector alone. The last point that I want to talk about is like auto. I am very bullish on auto, like for multiple reasons. One, both those categories, by the way, two-wheeler, four-wheeler, I feel like people differentiate it for different reasons, but I think it's very simple to understand. Let's back up a little bit. Did we really forget that in 2025 budget, we had a historical event happen? Income tax limit was raised to 12 lakhs. Like, did we really forget that? Because I don't think the market is appreciated enough. On top of that, there was GST rate cut. Like, what happened with people thinking of new ideas? Like, where do you think that money will go? Where do you think where those savings will go? So I think people still think of these new ideas so and so, but when it's right in front of you, just use your common sense. Think of where people spend. Like, see where people are spending around you, and then you'll have enough evidence to understand how the market is doing. Let's focus on two-wheelers, right? The volumes have exploded since the GST rate cuts. I don't know one company that has not grown in the two-wheeler space. These companies are very well capitalized as well. So they're profitable, they're generating good cash flows, giving you healthy dividends. I can't think of anything else. The only thing that I see the pressure mounting in these two-wheeler is the recent safety norms pricing pressure. That's going to cost them like 5,000 rupees more on each of these base models, which is what I've read. So I think that's still manageable. They can pass on or they can absorb and still take on some hit. But again, like safety is, I do value, and I would much appreciate companies pay 5,000 on their parts to have better bikes on the road. So four-wheeler positive. Why I think four-wheelers are also going to grow. So if you look at just the numbers, SUV is one of those segments where it has grown exponentially. 66% of passenger vehicles sold in India are SUVs today. I mean, I didn't know that this number was going to be so big when I was looking at four-wheelers, when I was thinking of auto or anything. I was just looking at companies that are doing that. And the other thing that I see is like we are also moving into autonomous vehicles. We might see self-driving cars from these guys because we also have technology in India now. But when I think of these auto companies, I think of it from a business angle. Like how can they avoid any sort of scenario where their supply chain disrupts, just like rare earths that we saw with two-wheelers? So how can that be avoided? So one of the biggest things that we need is chips. Like these self-driving cars, these new cars that require a lot of electronics, require these modules that need to be built in-house. And I think that has just begun in India. Tata Electronics and Qualcomm have built a new facility in India. Now, auto can have one of the best years if they play their game right. So I think the only negatives that I see in four-wheeler segment is that the wholesale volume is still sluggish and I see high inventory in them. So these are the two ways that I think you should look at auto. If you found this video useful, let me know what you want to know, what you're seeing in the stock markets and how you're reading about investing in general. I would love to know. I'd love to know how you are trying to navigate this uncertain market. I was very quiet for the past 2 months because I wanted to take a break. I wanted to understand how the markets are doing and I wanted to see if there's any more room for improvement for these companies. And if there is, where are we headed? Now that I have enough evidence, now that I have enough thesis, I'm going to share more on these 4 or 5 sectors that I shared, and I'm going to share what changes are happening in the market and if there are any changes in the current investment thesis that I've been sharing. I feel like I don't want to do things just for the sake of videos or capturing views. I also want to provide a lot of value to you guys so that it doesn't feel like you're wasting your time just watching another stock market video. You guys actually implement something, learn something, how I think in the stock markets, and take that framework and apply it in your own investing thesis that you're doing. Do share this video with people who are investing in the stock markets. I'll see you in the next video. Until next time, peace.